Colin Mason, Mason Financing, how are you?
G'day once again, Mr. Martinuzzi.
Good to have you back. Our monthly financial update. Very exciting, and everyone looks forward to these updates.
Always look forward to it, mate. I can't see
Only if it's
anything
good
like
news.
before.
Only if it's good news.
Yeah, always good news.
I think you got some good news for us. So what's the RBA doing? They've held that cash rate this week.
Well, RBA met this week, so that's their 6 weekly catch up now. So they caught up on Tuesday this week, didn't change the cash rate, but did talk about a few things around inflation and whatnot easing, which is great.
Yeah.
In fact, the monthly inflation was actually back within the target range of 2 to 3% from what we're reading as well, which is a positive thing. The RBA meets, so there's two more meetings. There's one in November and then there's one in December. And there's some strong talks now from a couple of the major banks as well around potentially the rates reducing, cash rate that is reducing before Christmas. So I think it might be December.
Yeah.
So we'll see what happens there. And then look, on the back of all that talk this week, we've also had one particular lender reducing their fixed rates further again. So now we're talking fixed rates that are starting around 5.39% for owner-occupiers and 5.55% for investors, which when you look at what the variable rates on offer are, you push to get a variable rate below 6% at the moment. So you're talking 0.7% nearly as a better rate, from a fixing perspective. So the risk with fixing can sometimes outweigh the benefits, though, depending on what your scenario is. So if you are thinking of fixing or you want to know more about those fixed rates and what it means for your independent scenario, then give us a call. We'll have a chat to you.
Okay, so these lower fixed rates now coming out from the banks. What's your take on that, or opinion why they're doing that? Is that because there's a forecast of a cash rate reduction, hence rates going down, the variable rates?
Yeah, that's right. I think, obviously money is a bit cheaper at the moment for the banks to get a hold of. So, and not just on the variable rate market, but the fixed rate market. So we're looking at mainly the 2 and 3, 4 and 5 year fixed rates. Anything beyond the next 12 months, that's where the money is cheaper. So the 1 year fixed rates are still sitting around 6 to 6.5%. So obviously in the shorter term, the banks aren't pricing in the rate cuts as quickly as maybe beyond the 12 months. So I think we'll see some movements definitely over the next 6 to 12 months. Absolutely. I think you'll see, in my opinion, anyhow. I think we might see one rate cut potentially this year.
Cool. So those the lower fixed rates are for longer term, 3 to 5 year sort of periods.
They are, yeah. So 2, 3, 4, and 5 years. I mean, to give you an idea, 5 year fixed rates you can nearly do at 5.69, 5.79 at the moment. So it just gives you an idea on again that longer term money that the banks are getting access to and obviously buying at the moment. Are at a cheaper rate than what the short-term money market is.
So tell me, Cole, a question I get sometimes, so probably worth exploring. If I was to go into a fixed rate now at that lower rate, let's say 5.5%,
yep,
and in 2 years' time I wanted to refinance or reassess, can you go and do that without being locked into that 5 year period? How does that work?
Well, I mean, look, when you're taking out a fixed rate, you're basically locking yourself into a term with that bank. So, for example, if you take a 5 year fixed rate, the bank expects you to have that rate for 5 years, and that's how they price that money and giving it back to the consumer, being the borrower. If rates continue to fall from what the bank paid for that batch of money that they've given to that borrower, then the risks of breaking that fixed rate or restructuring that fixed rate become quite costly, because they work out and it's an actuarial formula, so quite mathematical, but it could cost clients thousands and thousands of dollars, sometimes tens of thousands of dollars. So we've got to make sure that obviously we're having that conversation up front with the client to say, what are your goals? If your goals are you're thinking of selling in the next 2 to 3 years, then we need to understand whether the bank that you've got that fixed rate with will allow you to move that debt to the next property that you buy if you are looking to transition into something else. Or if you're looking to get out of the market altogether, we've got to be really careful with the conversation around what it's going to cost that customer as a forecast number down the track.
Okay, cool. So worth exploring, certainly, your options with a professional like yourself around all that, so you can plan ahead.
Yeah, 100%. I mean, there's a lot of variables, I suppose, when it comes to fixed rates. You've got to be across the advice, basically. And sometimes you won't get that advice if you're trying to Google it online, for example. So definitely having a chat with someone who knows the market, who knows the background of these fixed rate products, would put you at the front seat of the bus, basically.
Yeah, nice. So as let's say a home buyer, I'm buying a house to move into, first home buyer or a second home. Is there a benefit at the moment, do you think, in your opinion, or I guess it's circumstantial, but to go into a variable loan or a fixed loan right now?
Well, look, I mean, customers that are somewhat hurting at the moment with their repayments,
Yeah.
if they're looking at, say, a variable rate at 6.2%, just as a bit of an example, if they could lock in at 5.39 on the average loan size of, let's call it $600,000,
Yeah.
then that might save a customer anywhere between sort of $300 and $400 a month potentially. So it's actually quite a lot of money per week back in the pocket. Just to have a look at those numbers. So again, I think if like every scenario is different, every scenario is independent.
Yeah.
So having a chat with someone like us, we can go through them, sort of pull it all apart, and then put it back together again once we know exactly what the advice is that's going to be correct for that scenario.
Figure out what the best options are. So for variable rates at the moment, if you're looking at lower fixed rate with some lenders offering up to 5.39%, what's a comparable variable rate, like a best rate at the moment?
Yeah, sort of variable starts anywhere from 6.09%, works up from there. So it depends on, first of all, what you're borrowing, and then also what the loan to value ratio is, and then how your repayments are set up, whether it be principal, interest, or interest only. So if you're looking at sort of where most banks sit, 6.09 is where they start. The bulk of them sort of sit around 6.2 and upwards from there.
Yeah.
And again, like there's thousands of products on the market. So don't get too confused by looking at it online, because there is a lot of information out there these days. But having a chat with someone like us, we can go through it pretty quickly.
So if we're looking at a cash rate cut, so at the moment it's at 4.35%, and let's say they drop it by a quarter of a percent, 0.25%, will that get reflected in those variable rates?
Yes, it will. Yeah. So generally speaking, it will get reflected in the variable rates as well. So I mean, how much by? I'm not too sure until the banks start obviously communicating that, but it should show in the variable rates.
Historically, is it pretty dollar for dollar? So if it goes by 0.25, our 6.2% variable rate would go down by that as well.
It should do, but look, some banks might pencil in 0.17%, for example, or 0.18, so it might be the full 0.25, and that's where I think it's really interesting. Where if the customer's got a variable rate product, it's super important to keep an eye on what that bank that they're with does once the RBA starts reducing the cash rate, because some banks will unfortunately not play nice compared to some other lenders, and that's where you can make a jump to another lender to get yourself a better deal.
So certainly if you're a mortgage holder and you notice a movement in that cash rate, best to go back to your bank or broker to see what the options are at that stage as well.
100%. Yeah, that would be my advice. And again, you want to get the right advice, because most customers, I think the recent stat was 1 in 5 customers know what their mortgage rate is currently. 4 out of 5 don't understand what their mortgage rate is currently. So it's probably a good chance to check what your rate is and get across that. And then if you're anywhere north of 6.2% at the moment on owner-occupied lending and probably 6.45% on investment lending, then give us a call, because we've got options.
Yeah, absolutely. I'm guilty of that. I'll certainly just let it go and don't know what's going on. But I met with you the other day and we had a good chat, and certainly a positive outcome from the meeting. So I highly recommend to anyone listening to go and do that. And finally, just on the RBA's decision, you sort of said maybe December they'll drop that rate. Inflationary numbers you said for the month are coming into that target range by the looks of it, which is good news.
Yep.
Why do you believe that it's going to happen in December?
I think they'll do it right before Christmas. I think they'll get people through to December. I think they'll wait on a couple more months of these inflation data's results to come through as well. I mean, if inflation per month by month basis is coming back into range, I think it'll be interesting to see if we've got 2 to 3 months of that historical data. I think they'll look to maybe cut rates in December, but it's a fine line. Like, I mean, the RBA are in a tough position, really. I mean, they're trying to manage obviously monetary policy. So, and from that basis, they've got the cash rate as the only lever to sort of pull. So they've really got to be careful of what they do. But I think from a perspective of where we sit, anyhow, I think there's got to be something that has to give soon, anyhow.
Yeah, I know. Like the cost of living and the financial pressures on a lot of families is tough, and I think that's where there's obviously Christmas time, and they don't want to interrupt retail spending as well, which is kind of strange, isn't it? But I think that's a good reason why they might do something about that cash rate closer to Christmas.
I think so. Yeah, I 100% agree.
Got the upcoming elections too. Do you think that plays a part?
Oh, look, sometimes it plays a part, but that's only the state election. So I think, from a federal election perspective, which is next year, obviously, then there'll be some movement, well and truly before then anyhow. Normally there is. So I think we might see some decent cuts, hopefully, before that federal election next year.
One thing I think about often is, whilst, definitely as a mortgage holder, I'd want the rates to go down because it gives me more money. But I believe inflation pressures, I mean, the biggest thing pushing up inflation, or one of the biggest things, is housing and the affordability of housing, right? So
Yeah.
if they drop that cash rate, naturally you'd expect the market to heaten up again with a lot more buyer demand coming in, and that then forcing up prices even further. And that's where I see it a bit of a catch-22, whereas that might then push that inflation back up again, therefore reversing that cash rate drop.
Yeah, it's an interesting one, isn't it? Because I mean, housing's probably one of the 4 or 5 pillars of the Australian economy, right? So it has to turn over all the time. And I know, I always hear that the building has slowed down. I think there was a publication this morning in the media actually about building approvals are down for the first time in a long time. So I think, you look at results like that. You look at the properties that are on the market at the moment, maybe, for example, the amount of buyers in the market, so we always look at the buyer pool and potential the sort of vendor pool. I mean, from our perspective, we understand the buyers because we're sort of working with them. There's still plenty of buyers, but a lot of the buyers are saying there's probably limited stock on the market at the moment as well. So it's interesting the way the cycle works from our perspective. So I think that'll change, to be honest with you. I think there's going to be some more movement around buyers, obviously, with borrowing capacity improvements once those rates start coming down before Christmas and early into New Year. I think that'll obviously then spike a bit more of a flurry of buyers in the market as well.
Yeah, absolutely. Couldn't agree more. That's awesome, mate. Thank you so much.
You're welcome.
Another session done with Colin Mason. Guys, reach out to Colin, the team there at Mason Financing, should you want to have a look at your mortgage rates, refinancing, or getting a mortgage to buy a home.
Yeah, and I appreciate you having me on, and I always love these chats, Leigh, so thank you. Look forward to the next one.
It's been great. Thanks so much, Dave. Have a great day.
Good on you. Cheers, Leigh.
Cheers. Stop. Somehow.